Cheers to a trappy Thursday retail trading team. This is your routine debrief. We're going to start today's cool down by reviewing the day's results. Okay, so it was red day, just barely lost $100. Definitely disappointing for me as I was up about 2,100 until that last little sell-off at the end of the day there. So what happened, the reason why didn't I cut the position, why didn't I stop out, etc. So the position I'm in, the one that hurt me at the end of the day there, is I'm still playing for that retrace of the FOMC move. So I'm long 2ES and short 1 NASDAQ as a hedge. And at the end of the day, that really got hit pretty hard. We had a 30-point sell-off straight down, and that's not good for any type of long futures position. So I did erase the entire day's profits in 20 minutes there, but that's okay. So it's a swing position for a reason. We're not really too worried about what happens day to day. Obviously, the trade log is going to reflect a loss in the futures, but that's just a component of how they expire at the close. So down 100, but the loss, as far as I'm concerned, is not realized, and I'm still holding it, and I plan to hold it through the news tomorrow. And let's talk about why. So we're going to start with the macro chart. Okay, so let me draw your attention first to the 4-hour chart to the left. We are currently about 100 points outside the value area for the week. So that value area is from about 38.30 to let's say 39.30, near the top of the range there, and we're below it. So we are building volume. You can see here we're kind of entering to that double distribution type look. Yet we have not cleaned up this space in here. So from about 37.90 to about 38.30, there is no volume. It's an ugly low volume area in the chart. And to me, why I'm holding that long is I expect, I shouldn't say I expect, you can never expect anything. I hope to see us clean that up before resuming the move lower. So again, this is really just a play based on the fact that we do retrace those FOMC moves about 80% of the time within 48 hours. Obviously, within the first 24, we've only gone down. So entering into tomorrow, I'm hoping that we clean that back up. And if we don't, I will adjust. So what level am I looking at for that adjustment? Well, pretty simply, if we make a lower low from today and we start to build time and volume below that 3,700 area, I'm really going to be worried when we start to build time volume below this green. You can see this green dotted box here, or dashed box here. That's when I'm probably going to add at least the other NQ, changing the position to short delta, and likely probably more of an extreme adjustment. I might even take part of the ES off. So going into tomorrow, still watching for that retrace, but after today, we're just not seeing that follow through yet. The other aspect of the bull case, I think, is the oversoldness of this 4-hour chart. We're still quite oversold on that chart, and I expect us to rally up a little. Again, 80% of the time it happens. This could be in the 20%, could always be in the 20%. But I'm playing it for the long, and we'll see. The news comes out at 8:30 Eastern tomorrow. We'll see what happens. I just want to emphasize that these non-farm payroll days are very trappy. Often the first hour is not the real move. They're just trying to catch you one way or another. And so we'll stay nimble, but I'm really going to hold off until the RTH session before changing my assumption. So that is the look on the macro side of things. Let's go look at the chessboard and see more of the intraday look. Okay, so the major thing that occurred for me today is we lost, if you look at the warm-up document, which is linked in the bio, we lost that 37.30 pivot at the end of the day and on ES, and that pivot to me was very important. That was kind of the structural level that dominated the auction for the majority of the day, and we lost that level, and we did put in a naked POC above it at about 37.42. So immediately target for tomorrow. On that first impulsive move, I want to see how we react to that 37.42 level if we do go up. On the downside, we never cleaned up that 37.01.25 naked POC. So those are kind of the two immediate levels that I'm looking at as the news comes out. Again, I'm not going to adjust unless something super dramatic happens. That being time and volume below our green box here. Below 3,700 if the bears continue to take hold, that's when I'll adjust and just kind of neutralize the position, and then as the RTH session goes on, I will get short if it's appropriate, and if price is moving up and we're moving toward that 3830 area, I'm just not going to touch it. I'm going to let it ride. I have a target in mind for the pair, and if it works, great, and if it doesn't, like I said, we'll adjust. So that's the chessboard. You can see the supply zone that we put in overnight here from about 37.55 to 37.80. We did test that earlier in the day and we got rejected. And right now, if we do pop back up into there, I'm going to be really curious to see how we react at 37.75. So those are the closest targets for tomorrow. If you subscribe to the newsletter, as I hope you do, if you're watching this video, I will update you as the day goes on and as we see what the open has in store. So what really interested me today, and when I say interested, frustrated me today, was we kept seeing that volatility divergence. Volatility selling off as the market sold off, and even at the end of the day, you can see here right about 4 o'clock, we retested that low, and the tape itself was also near its low of day. So it's a little confusing on the volatility front there, and it also a disconcerting factor is if you look at the VIX VIX chart, we have closed red in VIX every session since October 17th. So that's just a little bit of fuel for the bear case. But I'm really going to be watching these horizontals, how react to that 2680 level, how react to that 2550-ish level to see if there's any continuation or if there's a false break one way or another. Volatility is a little weird. So normally I do lean on volatility a good bit, but for the purposes of tomorrow, I'm definitely going to be looking more at the actual price action itself, just because of how weird volatility has been behaving. But we still have those key levels again, 2680 and 2560, I think are the most important levels to watch there. And that's really it. It's, again, NFPs are notoriously trappy. They're the first hour or so is very often not the actual move of the day. So it's another day like FOMC. If you are trading it, it's staying small. That's why I'm in the pair. That's really going to be my dominant trade. I will take obviously perfect device signals, and as we look at the open, we'll go from there. But just be careful. So I really think we could see a very significant move one way or another. It's just important to respect the levels and not get too involved with that first move. And that's all I have for you today. So as always, engagement links and Playbook are in the bio. I'm always happy to answer any questions that you have on this video if you just go in the comments there, or if you respond to me directly via the newsletter. And we'll get ready for tomorrow. I'm hoping that it's exciting in a good way. But regardless, I expect for us to see some fun tape action. And I'll see you on the trading floor then. Stay classy until then.